Hello, good morning. This is Julie, J Auto Trading Strategies, and this is an extremely important video. So get your popcorn, relax. I'm going to go through psychology and the trading strategy and how to make a lot of money trading and what you need to do to learn how to trade and find a system that you can trust, and then just go with that system and understand what it is you're looking at on the chart. Please note on the website of J Auto Trading Strategies, there is a tab, Rules, Terms, and Disclosures, that show the futures trading risk disclosure and the CFTC Rule 4.41 Hypothetical Performance Disclaimer. And please review these before trading my strategy or anyone's strategy, and always sim trade before trading so that you get to learn what you're doing. Finding a direction in the market and being successful in trading that direction is not as easy as it looks. Here's a 10-minute chart that shows this example with the yen, and you can see the volatility at the announcement of the Bank of Japan just would have whipped you up and down tremendously until the price action turned around in the direction of the overall trend and started trending in that direction as it did on Friday. How to take advantage of this on a lower time frame chart? Well, you can trade a 10-minute chart, and that is wait for your candle to turn in the direction that you want to trade. I use the super trend indicator. I have two different settings on my chart to show me a short-term price action and a longer-term direction that I want to be trading in. So as you can see from on July 29th, despite the fact that the price was coming down, I only wanted to be taking longs. So you wait for price to turn back up, but that does not mean that you're not going to get a second flush. There are nuances to trading, and that is that you have to get knocked out of your position a couple of times, sometimes, if you can't position yourself right, before you can find that sweet spot to get in and price turns around where it is working in the same direction and allowing you to get a directional trade. So that's why I came up with my directional trade strategy, to help eliminate those missteps of getting knocked out in the market. And I'm going to share that with you right now. I use the NinjaTrader Market Analyzer, which I have used my Bloodhound template to show me the higher time frame trend on a fast trend. And when I see a market that is trending weekly, daily, 60, 15, all in one direction, that's the market I want to trade for the best opportunity short-term day trading. Obviously, I know the direction I want to go, long or short. And if I see a market that is mixed, where it's printing different colors between the higher time frames, I just stay away from that market because it's likely to be experiencing a choppy session. The market can't be trending all one direction constantly. I wish it could, but there's so many different market participants that have different competing interests that we can't get a clear market direction all the time. But once we start getting a market direction that matches, well, first we find a higher time frame trend, then we come down to a larger Unirinco. These are my magic bars, and I can set these up to match the volatility. If I get too low of a bar, you get all the nuances of the trade up and down. But when you bring the bar out, you can see better the direction that you want to be trading. And how to trade these are with my volatility bands. And this is really the key to my system. I want to take long trades when I'm above the red volatility bands, and short trades when I'm, below the red volatility band. So I want the volatility bands to be white and preferably above the prior red volatility band. And anytime that I get that pattern and get a pullback, this first long bar close after a pullback in the direction of my trend is the sweet spot trade. And this trade here will get you the most bang for your buck time and time and time again. So once you get your pattern and you find a market that is moving in your direction, however you want to trade it, do you see here was all choppy? You just stay out of that market, and you can tell it's choppy because you have your red, white, red, white, red, white, and your red, green, red, green, red, green. So just walk away. You don't, and it's all empty in my direction guide. My direction guide, let me change this to currencies. I had it on the wrong market. There you go. Each one of these solvers is designed for the regular trading hour session in the futures market for bonds, golds, energy, corn, beans, index futures, and currencies. So if you want to trade in the regular trading hour session, you would prefer to get a market moving in the direction of this top row, because this means that price is moving away from the prior close and the current open. So the wind is behind your back, up or down. The second row is the prior day high-low. Anytime you're moving outside the prior day high-low, you know that the price is definitely expanding the range. And you can see that the prior day high-low started picking up here when we were past the prior day high-low, and also in the direction of the trade. The holes mean that it's not printing in the direction of the trade. There's a little bit of a consolidation period. Okay. So when you're in consolidation inside of a large trend, you want to be buying the lows in these gaps. So when you see all the green printing and you start seeing a consolidation period, be looking to buy the low wherever that is. And you can find that low on your smaller time frame chart, which we'll look at in just a second. The third row is the current day high-low, and that means that anytime price keeps moving that current day high-low higher and higher and higher, or lower and lower and lower, you know you've got bingo, especially when you get your overall direction going in that direction. So when we're going long and all these direction guide stacks levels are in the same direction, you've got bingo. And this is where you can trust your trades and take it in that direction. A lot of us, like myself, are finding trading after large careers in other areas. And so we have to reformat our brains for trading. I came from a very analytical background, and I had to analyze everything for my work. I was I would have been an analyst if I had worked in IT. In fact, my only IT job was analyzing IT contracts for a big software company, their internal IT contracts. So I was an analyst. Um, but my other jobs was like an analyst, and that was a litigation paralegal. It's like a forensic accountant or an analyst. We had to, analyze not only the law, but we had to analyze the documents, the data that the clients were involved in, and parse that data to come up with a case for our attorneys. I did commercial litigation. So it took me a long time to unwind my brain from analyzing every tick and minutia in the market and come up with a strategy that I could trust, that was a pattern in the market, and that would, reward me financially once I was able to not only recognize the pattern, but go with that pattern repetitively every time I saw it occur. And thankfully, the markets are fractal, so I can have various time frames on my chart, and that didn't matter as the patterns are the same. So we'll go into that in just a little while. So that was a little bit of my psychology. You have to forget what you used to do. I had to forget analyzing the market or saying, right here, if I were in the market, well, certainly the market can't keep going up. It hit yesterday high. It's going to come back and hit yesterday close, or it's going to come back and hit this pivot, which it did not. You sit there and try to analyze everything and say, well, it's going to come back to this support level. It's going to do this. The one golden rule, as Hogue, God bless him, will teach you at Top Step Trader, John Hoagland, price doesn't have to do anything. And that's because there's so many different competing algorithms in the market. Price can do whatever it wants. So you have to pattern brain, go with your eyeballs on what's happening in the chart, and forget your brain about where price you think is going to be going, and be hesitant to enter a good trade because you were waiting for price to do something else, but it did not, and it went where it was going to go anyway. So especially in a strong trend like the yen was yesterday. This was a huge move for the Japanese yen, by the way. The currency is changing direction, possibly for one day at least, pending the Bank of Japan's failure to buy more bonds. So that could change next week, and this could all be coming back down. So you have to be very attuned to what the events are and just go with the flow after the event occurs and go with the market flow. So if you want to trade down, I'm going to get you a down place. Here we go. This works just as well in a down market where we had a here we go. We had an uptrend, and then we broke through that uptrend right here. And this was a long breakthrough. Sometimes they just run for a mile. Look at that. And you think certainly the move is over by now. It can't go any lower than that. So you don't want to jump back in short at, support resistance, because you think certainly that's going to come back up. You never know what price is going to do. When you get the signal to go back short, that's when you need to be paying attention and go short. You never know what price is going to do. You just have to trust what your eyes are telling you in the market. So I had especially had trouble trading because of my analysis of my past life. I had to get rid of all of that and just trust what I was seeing on the chart. And then, a lot of the time before I had my system that I created for myself, created my own way of looking at the market and framing the bars. I had to get my own custom bars the way I liked them, which I've done, so that I can understand the market and get it to go in my direction and then take the turn when the turn occurred, not just when I got a signal, sitting back and forth. I couldn't sit there for 30 minutes just because I got a signal. I had to wait for the turn, and that's better because you have the momentum in your favor then. So my custom bars was my first big accomplishment, breakthrough, and you'll never get me to change from not using my bars. I can do many things with these bars. I can see when price is not behaving, as I call it, when I get all the choppiness and I just go find a different market to trade. I'm not even, I bother with this market once I start seeing this red white. I just ignore the market because I know my bars and I know the reward that when I wait for a breakout of the volatility area and I start seeing the bars behaving, that I can come in and jump in the market at this time period and take a huge amount of the money out of the market at this time. You see how the volatility bands are just behaving and following suit and aligning perfectly, and the all the bars or all the flat tops and a down move or the flat bottoms and an up move. That's what I'm looking for. And this is when I want to get interested in dropping down to my lower time frame and get involved in the market. So hell no, I'm not going to do this. I just find a different market. I'm not going to sit here and try to force it to go my way just because I'm in a downtrend. I'm not going to force the market to start behaving. I want the market to already show me that it is a behaved market. I would probably have not traded this either. So I'm looking at this. This is what I want. In my direction. So if I have a target to trade to, get rid of that Fibonacci. Oh, that's on my chart. So hell no. Obviously, I want to stay out of that. This is what I want, and so I've learned to set the bars up the way I like them, and then I can drop down to my lower time frame chart and enter the trade. I also put a Keltner channel on my chart, which helps me tremendously even more see inside my trend volatility and allow me to just nail these when I'm paying attention to that market. The hardest thing about trading is finding a market that's behaving itself. And even when you find a market that's behaving itself, in between that behavior, you're going to get a lot of this where it's not tradable. So when you find that you can't find a tradable market, but you know that you do have a bar direction, you have to widen your bars. So you can widen your range with my magic bars many different ways and get different patterns as a result of that widening. and this evens it out. You have to use a little bit more risk and fewer contracts, but you get to stay in a position, you know when to get in after a doji, and you know when to get back in your trade, and have a better chance at getting a successful trade. See that? That was just amazing. You can get inside of here. It's like jumping into a lava flow. You just want to jump in. You start seeing the bar trading in that upper Keltner channel, and you're in a strong uptrend. You've got your weekly, daily 60-15, and you see that super trend band holding price. That's where you just enter a market order and sit there and take it for as long as you can ride it and get out at that first red candle. Okay? This one would have gotten you in and out a couple of times. Trading is not easy. If it were easy, everyone would be doing it, but it is manageable once you start learning what you're looking at and trusting what you see. So my tools are on my chart, and then I've created patterns to help me go in and nail these on my signals. Look at that. That's in my template. That's why the traders that I have sold my template to, and this is just a trading template. This isn't meant to be an algorithm that you can trade in your computer. I'm working on my algorithm now that Blackbird's been released. But this is a trading template to help you find trades that will work. So I wanted to show you what to look for and how to apply the template, and hopefully be able to get some trades out of the market. And that means increasing the bar size. We can't always trade with a small 3-3 Unirinko, which we can on a regular day. A 3-3 is just fine for your entry bar. I love a 3-3, but when the market is really volatile, like it is with the Japanese yen, you need to increase that volatility to give you a chance for success. That means that you have to widen your stop to, $250 or $300 risk per one contract before you jump in that lava flow. And this is just taking a minute to load. I had forgot to put this back down to 5 days. I've got like 30 days on this bar, so it just takes a few minutes. There it goes. Do you see how lowering your bar will just whip you in and out of a trade? It's much harder to find a trade like this to get knocked in and out. I mean, here was a nice market state here, but they don't last long. Sometimes just a few minutes before going like this, and then sporadically moving up or down. So you can't really trade this in a volatile market state like the yen has been trading. You'll just lose your account, and that's what happens to many traders, is they're not able to manage their trades. So let's put this back up to that bigger bar size. So 5 and 20, you add the two together is 25. This means a 250 tick head to toe. If it were to reverse on you, like it's going up, 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 and then it reverses, that would cost you $250 to get that signal to get out of your trade. So that's why you require a bar to close in your direction before you even get on board in that lava field. And hopefully you can take some profits out of the market before it knocks you out. See how it's coming against you? And then that way you can park your stop behind these pullbacks. You see each one of these pullbacks? My template will get you in the market after those pullbacks. This is where you want to be entering, and your stop goes right behind each one of these pullbacks. And if you do that, you won't get stopped out unless the market changes. See that? It did knock you out, but the market never goes directionally one direction forever. But you try to get into a section of the market once you see your bands behaving on your higher time frame, everything together, your weekly, daily, 60, 15, and then here's your lower time frame, and you make it as easy as possible, finding that sweet spot, making the market behave. It would not behave on that 3-3, but I knocked this up to a 25 tick bar, and I got some behavior out of it that it can make it tradable. And you're looking for price on this smaller time frame one to be inside the white larger one, that larger super trend that will be on your template that I give you, and then inside the smaller super trend too. So you can either ride the super trend all the way up, or you can do probably what I do, is I just take chunks out of this with position size. Once I get a signal, I'll get in. I know where my stop is. So this is my risk. My risk is from this level here, my entry, to here. And then so I'll take my ruler or a line, and I'll do like that. And I'll say, this is my first target level if I entered the trade. So I won't even think about getting out of the market until that first one is hit. But there's a lot I can do within that period, including taking it down to a smaller time frame and here's how you really make money, including when I take it down to that smaller time frame and I'm inside that spot, I can be hitting these and adding on to my position. So I get a smaller time frame pullback, which I sit through because I'm on my larger time frame chart. So I trade my larger time frame when I find it after I get my market structure behave, when I find the behavior I'm looking for. I enter on that higher time frame bar. I'm not entering on this bar. I wait for that higher time frame bar, and then I can come in and nail these shorter term ones because I know that the market is structured and I can nail extra positions. I can add on, I can make more money. The market's behaving for that brief period of time. It could be 5 minutes, it could be 30 minutes, it could be 2 minutes. Hopefully it's longer than 2 minutes. It could be an hour, but sooner or later, the market is going to do this. And once you start seeing that red, white, red, white, red, white, remember I told you the markets are fractal, you don't trade it. you get out. And that's why I like the Keltner channel with the VWAP band to show me where I am on the chart. So here was my profit target, by the way. I would have entered my trade here. I would have added on here. I would have added on here, and I would have been out here. And I'm done. And that was all I would have been looking for that trade. I would have been trading this section and entering here. So I hope this helps you understand the system. I have my custom Unirinkos that I can make any way I want. I could drop this down to a 1-1 if I wanted to. I don't recommend you do this on the yen, but you could do it on the E-mini S&P 500 if you wanted. A 1 or a 1-2. And I'll show you what that looks like. But it's like very tiny pullbacks. It's psychologically hard to do that because you keep wanting to get out on those. Anytime you see a red bar, you want to close your trade, and you have to stay in the trade. Price is going to move up and down, cycling between levels. And when you see a red bar, the psychology, you want to shut it off. So here's what that one tick looks like. It's very small. And there would be my short signals, but I do not recommend trading a one tick bar, but you can do it. The E-mini S&P 500 be about the only thing. But if you ever want to know exactly what price did, tick by tick, here's your one tick bar. So let's change this back. To a regular bar. Something else that you need to know about my custom bars are these dojis. I mean, what can signal you, what could be more obvious of when to get back in the direction of your trade is when you start seeing wicks. That means price is changing direction. And the doji. So you wait, though, for that full body candle close after the doji before entering, because sometimes the dojis can stack up. And you have to wait for that full body. Here was a faker where you would think that you would get knocked out, but honestly, it did not. You would have stayed in the trade. But like anything else, getting in late to the party is where most traders fail. They will see a move, but they did not react in time, and then they'll enter somewhere up here where price has already made the biggest part of the move. So being able to trade is being able to recognize these market state changes, and there's no better way to do that than using the Unirinko. I show you exactly when to get back in, because when it breaks that volatility level is what I'm looking for, and then I want to see that pullback. So the pullback here was just the doji. But once I got that first body close after the doji, I was in, or I would have been in if I had traded that. And I probably would have traded up to the yesterday close and get out until I got a close above the yesterday close. Because you never know if price is going to, where it's going to go. It's hard trading into support or resistance, but those are your targets. So that's basically it. So let's summarize real quickly. I look for a weekly daily 60-15 going in my favor. It had been weekly daily 60-15, trust me, on the yen up until the very end of the day when it turned down. But once you find that market state and you get your confirmation with your direction guide, you rely on these dojis and the pullbacks. As long as it's staying in, you see how it stayed inside that top trend and never came down to the third one, really never even came down to the second one. It was pretty much all the way up on your higher time frame. That's what you want. So you want to just jump in this lava flow on the smaller time frame as possible. This is a 40 tick bar. This is a 25 tick bar. And as you saw, we can knock this down to a 10 tick bar or a whatever you want to knock it down to, and then you enter on this smaller time frame one each time you get a pullback or breakout in your direction. So here was a remarkable opportunity right here, just vertical. Sometimes these consolidation periods can last for an hour or 2 hours, and then it gets back in the direction of the trend. So you have to be ever vigilant and not give up on something as it's taking its time. The market has to rest. You have market participants who made a fortune. They're taking their marbles off the table. The market is resting, but you see that the market never came back. And if it had come back, you just simply get out and wait for that next, turn, as long as you're inside the main trend. So you're looking for market state. You don't want this. You can't trade sideways. The only way I say that you can trade sideways. The only way to trade sideways is to sell the top and to buy the bottom. It's that simple. So every time it gets up here, you sell it. Every time it gets down here, you buy it until you get your breakout. And usually it'll break in that direction or a fake out. See, it turned. Well, this was a news event. This wasn't a breakout, fake out. You actually had that news event turning the direction. So anyway, let's look at the E-mini because I think we might be looking at the top of the world. Okay, so here's the E-mini. Friday we had it weekly, daily, 60-15, all green. As you see, the direction guide started firing off all in one direction. So we really only wanted to look for longs. This market is weak, though. It is not strong. It did not even make it up to the yesterday 127. It fell by 2 ticks. There's just not a lot of strength. So I want to take this body right here and encapsulate that body and these bodies. So we've had this huge several weeks ever since the July 14th. So 2 weeks of sideways, just in a sideways stalled pattern. And we got our first close above this box, which would lead me to believe that this is going to break out to the upside, but there's no momentum. There is no momentum on here. Let me show you another chart. Well, here is what I'm talking about. You see how the momentum came up in the market and then went flat as we started consolidating? Well, we're breaking out of a range, but the momentum didn't even get to the prior peaks where it approached support. The market knows that this party is over. So I'm sure that this is going to be a breakout, fake out. And it's likely anything that comes below 2148.50, it's going to be all she wrote for the E-mini. Anything from there down, sayonara. If, however, there does get some momentum and the market just wants that 2200 number, which is like right there, then sell that. I mean, sell that for sure. But I'm really going to be looking for a test of this high, which we're right at. So Monday is going to be key, Monday and Tuesday, and for the market overall. Because what did I say you're supposed to do in a range? You're supposed to sell the high and buy the low. Well, people are going to be selling this high, and that low is going to get broken, is what my little mind, my little analytical mind is doing. But remember what I said? We don't listen to my analytical mind, we watch the market. So I can't help myself sometimes. I can't help it. So that's why I said we might be at the top of the world. Very difficult trading the E-mini this last few weeks. Very difficult. This is the one market where trading a 1-2 Unirinco is almost acceptable. This is the only way you can get away with it and get us, some directionality in your day. So if you're an E-mini trader, you're going to love my bars. To know when you're in a trend state versus selling or buying support resistance at your value areas. Most of the time, traders in the E-mini, they'll sell that second touch back into the VWAP. This one failed, went up to the VWAP upper. See that? To the tick. This is the E-mini traders. The algos are tied to this on the E-mini, and where did it go? It went straight to the VWAP. So if you are an E-mini trader, you will love my magic bars. And a 1-2 is a good day trading bar to have. When you see a breakout, like we were in a big uptrend here, vertical, and it turns around and just keeps running, what are you going to do after this first pullback? You're going to take it in that direction. Okay? That's how I have my bars set up. So come buy a template. You'll get the custom bars. You can join the training room where we're in the markets live, and we'll be looking for the best market to trade. We'll be finding the best market for that volatility, and set the bars up to get the maximum opportunity. Once we find a market that had been trending, we can go in that direction on the smaller time frame. So in the E-mini, we know that we want to go up. So each time it broke past that short volatility level, we're in, hitting it, hitting it, hitting it, hitting it. It's all vertical. And staying out the rest of the time. This is the price action we want to see. And here's the inflections long. This gets you out of the chop and waits for a pullback after that break. So it waits for that breakout and then the pullbacks. Or if you just want to go long, just get me long. Or if you just want to see what the super trend long looks like, there it is. And start nailing them. Once you get that weekly, daily 60-15 going, this is what you, this is what you expect to see. And again, this is fractal. I use VWAP. I also use another indicator called MP lines, where I can go in and change my open outcry. Oops, I can type. And this will show me my river of gold. And this acts as a pivot. Once we start trading above the river of gold, I'm only going to look for longs. And below the river of gold, I'm only going to be looking for shorts. So here we are above the river of gold with our weekly, daily 60-15. And we're trending in a behavior state on the lowest time frame, a 1-2. You can't get any better than this. This is nirvana for the E-mini, because most of the time the E-mini is doing this. It's not tradable unless you're very specifically looking for locations to place your trades from. And even then, it doesn't work all the time. So it came up to this upper one. I mean, very difficult. You can't, very difficult sometimes, and especially during this 14 days of chop. Here's the super trend short. So this tells you where the meat of the move is. If you want your super trend short inflections, you only get those. Or if you just want to go all short, you can get all of them. But there's your meat. So I hope this made sense. And if you like the strategy, like the templates, very reasonable, pick some up and then join us in the trading room, and we'll put them to practice and start putting some money in our accounts. God bless, and see you soon. Thank you so much.